If buying a home is on your mind, it's exciting to think about all the moving in, the decorating, and all of the fun that you'll have with getting into that home. But once you've applied for a mortgage, here are some things you definitely do not need to do. Number one, don't deposit large sums of cash. Lenders need to know the source of your money, and cash isn't easily traceable. So before you deposit any amounts of cash into your account, make sure you've had a conversation with your lender so that there's not going to be any questions that come up down the road. Number two, don't make any large purchases. Now is not the time to go buy the car or the couch or the refrigerator. Wait until you've actually closed on your home to do those types of things. Large purchases can be red flags for lenders. People with new debt have higher debt to income ratios, and that can affect your home loan. Don't go buy anything. Number three, don't co-sign loans for anyone. When you co-sign a loan, you're making yourself accountable for that loan's success and repayment. With that obligation comes higher debt to income ratio for you. Even if you promise you won't be the one making the payments, your lender will have to count that payment against you. Number four, don't switch bank accounts. Lenders need to source and track your assets, and this task is a whole lot easier when there's consistency with your accounts. So before you transfer any money or you switch bank accounts, talk to your loan officer. Number five, don't apply for new credit. It doesn't matter if you're applying for a new credit card or trying to get a loan for a new car. When you have your credit report run by the organizations in multiple financial institutions, it can have an impact on your FICO score and actually lower your credit score. Lower credit scores are detrimental to the interest rate that you're going to be charged for that mortgage payment. A higher interest rate means a higher payment, which may mean that you can actually buy less house. Number six, don't close any accounts. Many buyers believe that having less available credit makes them less risky and more likely to be approved. This just isn't true. A major component of your credit score is the length and depth of your credit history, as opposed to just your payment history and your total use of the total percentage of credit that you've used. When you close an account, you reduce the total available credit that you have. You also can eliminate years of credit history just by closing an account, so leave those accounts open. And finally, number seven, do discuss changes with your lender. Be upfront about any changes that occur or that you're expecting to occur when you're talking with your lender. Any blips in income and assets or credit need to be reviewed to ensure that your home loan does not get derailed. Ultimately, it's always best to fully disclose and have a conversation with your lender before making any financial decisions once you've applied for your home loan. Remember, the bottom line is you want to be able to buy a home. Make that your primary objective and make sure that you don't do anything with your finances that's going to impact your ability to borrow money, to get a loan, to be able to make a payment, to purchase a house.
Hi, I'm Jeff Jones of eXp Realty. Visit meetjeffnow.com to schedule a conversation for us to talk about your home buying goals so that you can make a confident decision, or visit readytobuyscore.com to discover how ready you are to buy. Have a blessed day.